Start talking.
Hi, welcome to our podcast today. Today we're going to talk about the total cost of ownership of business software systems, or ERP systems. So what we're going to do right now, just a little bit about some of the topics that we plan on getting into today. First of all, we'll do some quick introductions. Then we're going to define a couple of terms. Of course, us in the software industry, we're just famous for using things like acronyms and technical terms and stuff like that. So you can call us out if we start to get too technical on that, but we'll define a couple terms for you. We're then going to kind of break down some of the details on the variables that we see in things like total cost of ownership calculations. But then more importantly, we're going to get into some examples. So Samantha's going to present some examples, and then hopefully we'll have time to talk about spreadsheets and get into some things like that. But let's start with some introductions. So Samantha, I'll turn it over to you.
Yeah, so if you don't know me already, my name is Samantha Niton DeForge, and I'm the Business Solution Specialist with Accurus here in Calgary. And like Marie mentioned, we are going to be covering off some quantifiable metrics when it comes to really examining what your systems are costing you. It is a very interesting topic that we see most businesses not fully understanding. And like Marie mentioned, assuming that Excel is essentially a free software. So, I mean, when it comes to quantifying your systems, there's a lot of variables that go into play, but I think we should start with the first part, Marie, and really, define what the total cost of ownership is from a software or a business solution perspective.
Yeah, thanks. So first of all, I'm Murray Quibell. I'm the president of Accurus Solutions. My background is I'm a chartered accountant by trade, or a CPA. Also been in software and business technology for my whole career, which goes on longer than I care to admit at this time. I'm going to put my accounting hat on a little bit today. So we're going to talk about numbers and compliance and timeliness, accuracy, completeness, and so on of your data. So I'm going to put that hat on a little bit today. So yeah, thanks. So Samantha, the next thing I think we're going to do is just go into defining some technical terms. Okay, so TCO is the first one we're going to talk about. So that's total cost of ownership. It's also similar, you might hear of ROI, or return on investment analysis. All it's trying to do is say, hey, what's the cost of doing what we're doing today? And then we're going to compare that to what the costs and benefits might be of doing something different. What most analysis will try to boil it back into a net present value and try to quantify it over a period of time. So whether it's 3 years or 5 years, those are kind of the common metrics. Usually we should see a positive ROI. Yes, surprisingly, most of these systems are going to actually generate a positive return on investment or total cost of ownership of probably doing something different. But we usually see that within the first year. So typically we might plot that over 3 years, and the results are usually fairly compelling. So what I'm going to do now is just kind of break it down. And so what are some of the key variables in terms of what kind of forms the total cost of ownership? And I'm going to break it down. We could talk about this for all day, and just
hours, as far as really hours.
We could, yes. And we've done presentations on this, and we're not going to spend all of our time on this today. And just to be clear, today we're going to wrap up in 30 minutes at 2:30 Mountain Time. So we have done presentations on this, and we'd be happy to get into any of these conversations a little bit deeper. And we probably will have further podcasts on it. But right now, I'm just going to introduce some of the variables that we see when we're talking about total cost of ownership. A couple of the obvious ones are in the systems and administration type categories. Then I'm going to get into the more interesting ones that are around opportunity costs and operations. But starting with some of the systems costs. So some of the easy ones might be, how much does your software cost? And there's usually fixed and variable amounts around that. So the variable might be per user count or per transaction. There might be a maintenance cost, and that's a traditional software model where you might buy the software and install it on some servers, but then you pay an annual maintenance cost. So there's some of the software costs. Getting a little bit more technical, there's a whole bunch of variables around hardware and technical devices. So this could be servers and server components, devices, backup devices, physical security, and that might even be securing it physically in a controlled area, or other kind of devices that control network and kind of intrusion and that kind of stuff. But then also the technical software around SQL Server licenses, client access licenses, server, all that kind of stuff. There's
which for us is really a thing of the past too.
Well, yeah,
not something we work with. So, but it is a very real reality now and today. Oh, Murray, I think you lost you. Oh, Murray's having some voice and internet problems. But I guess basically what it all comes down to is, oh, you back? We lost you for a sec.
Oh, okay. Sorry, we're kind of getting some quantifying some technical metrics there. It looks like my internet has decided to go a little slower. I'm actually just going to change internet services on the fly right now here, if you don't.
All right, well, I guess I'll just kind of keep on going then. I mean, from when you calculate the cost of ownership, like Murray's been saying, there are a lot of variables that businesses do need to take into account. And that's everything from, managing your business, how you manage your operations, and of course the IT aspects of it as well, whether or not that be managing SQL Server, licensing, database licensing, Windows Server updates, so many different variables when it comes to managing your business from an operational standpoint and an IT standpoint in that particular case. So, are you back?
Well, I think so. Am I back?
I think so. Yeah, I think you're good now.
I'm just in the process of actually changing my internet to my phone hotspot, which usually looks pretty reliable. But anyway, hopefully I'm back here. What we're trying to do is just talk about the technical details of quantifying things like, hey, your internet that sometimes is a little unstable, but also some of the technical aspects, including server software and things like that. One of the things we're seeing today, of course, is remote access. Does your existing system require you to throw a bunch of server hardware or software or some other kind of firewalls or other kinds of VPN or things like that to help you get access to that? Or is it just native within the software? And again, that's usually a compelling metric with a modern web-based application versus a traditional client server. So they're just natively support remote access just because of the technology. Some of the other variables around the systems include, what does it take to support it? Do you need to have IT people on staff or outsourced staff and that kind of stuff? Getting into some of the administrative details, I'm not going to spend too much time here, but things like invoicing efficiency, redundant data, how much time does it take to collect data to invoice, whether you invoice for product sales or service-based, all that kind of stuff. Again, if you have inefficient systems or maybe manual systems, some of that just takes a long time to generate. Risk of error, again, if you have manual systems or systems that don't keep track of the data on a real-time, automated and consistent basis, again, you have risk of error that you have you got everything? Have you made a transposition error or just some kind of calculation? Audit and compliance, again, another huge cost. So if you are a company that needs to be audited, or if you have some kind of a review engagement, if there's risk perceived, whether it's using spreadsheets, all of a sudden your audit costs go up. Also accounting costs. If you don't have good systems and good procedures for doing things like reconciling your bank or doing your consolidated reporting, again, all of a sudden your accountants, or even just currency conversions. We're seeing companies spend thousands and thousands of dollars every month or every year to have their accountant do a bunch of stuff at the end of the year. So
a lot of reconciling for sure.
Yeah, reconciling for sure. So it's not just errors, it's just efficiency, and there's some direct costs in some of that. Quickly on some of the more interesting ones, I like to focus on operations. So when we think about people, how can your people be more efficient? And what we're trying to drive towards is your operational business. So how can you do more throughput, manufacture more, get more product out the door, maybe do more with less. So things like that, that directly, if your systems are not properly supporting your people, and if they're getting in the way of people, all of a sudden the operational efficiencies just for people, all of a sudden it starts to have, you can get some compelling numbers on that. Also things like inventory on hand. So if your systems are not efficient and you're not running real-time inventory, all of a sudden you may be carrying $2 million of inventory when all you need is $1 million. couldn't you use that $1 million better to train people or get more assets or that kind of stuff?
Well, and I think that, Murray, I think the biggest thing that we need to emphasize too from an operational standpoint is that whether or not you have an ERP or any business solution that you're operating, and yeah, Excel does count as a business solution, but I think the one thing that people need to understand is that operations drives accounting. If you're looking at your business solution to just be a simple audit trail of your business, then you're doing it wrong. These tools are designed to grow and scale your business, maximize revenue generation, really enhance your operations and automate processes from a day-to-day basis.
Yeah, exactly. And that's exactly kind of where we see the benefit in those is what is maybe the opportunity cost and how can we drive more revenue? So in that might result to directly in increased sales. How can we get more customers or sell more to your existing customers or get into some product lines that your customers are demanding? So what we're seeing now is using AI or and other kind of like artificial intelligence or other kind of automated procedures to help you analyze the data and help you drive more revenues like that. But we'll get into, Samantha, I think that you've probably got some, what we do want to share is...
I want to get right into the numbers. I mean, I think a lot of people are here to, understand what quantifying your systems looks like, right? Why is Excel not free? And I think that there's a lot of variables here, and we've made a little bit of an Excel sheet here on just some common business scenarios and an actual customer example that we've had transition into something a little bit more automated, really to quantify these numbers for you. And you can sort of take it and evaluate it and see yourself that in fact Excel is not a free solution, and you have to really identify the cost of ownership of your existing solutions before picking a different product. So I mean, the first thing we want to get into as far as statistics and data goes. The first thing, obviously, when we're talking about PCS deployment, what does that mean? It's private clouds, deployment. When we're talking private cloud, that's usually, a server sitting in some sort of a data center, which is sort of a standard now, with the fear of ransomware being very much alive in today's market. But this could also really be an on-premise solution, because really there's no difference between being in a data center and running older systems or having a server on site. You just do tend to have much, much better security if you are being hosted in a data center. From an IT requirement standpoint, if you happen to be running older systems, you tend to run into the, now the server setups, buying servers, server maintenance, and then remote desktop connections or VPN tunnels, unless you're running a web-based solution, at which point none of these would exist. So when we're looking at this from a quantifiable perspective, if you're outsourcing IT for about 40 hours a month, which is a fairly conservative number if you are running some sort of a private cloud server-based hosted solution, and this could be a QuickBooks, this could be Excel, this could be some sort of a archaic ERP system even, you're probably spending around 480 hours a year, which is 40 hours a month for your IT department to maintain that infrastructure. Windows Server updates, security updates, managing VPN tunnels, any sort of IT related cost is really quantifiable and coming in around the $29,000 a year. Now the $5,000 usually a flat rate with your first setup and a recurring fee over the next 3 to 5 years. Or if you happen to scale your business or you need more resources, this is a fee that's just consistently adding to your business. Next, we obviously want to talk about Excel management, managing your inventory, project tracking, bill of materials, sales, all in an Excel sheet. Now, we're talking about a 50 employee person based company is what we're sort of quantifying this against. And they had 6 people managing these sheets. And we haven't even gotten to accounting yet. So when we talk about quantifying, and measuring this from inventory, project tracking, you're talking 12,000 hours a year for these people to sit there and manage these sheets. And that's just not something you need with an integrated business solution. So you're looking at a $300,000 investment to just make sure your inventory is accurate. And to boot, it usually is. And now these systems can, range of probably around the 65 to 75% around inventory accuracy. And that's really a big factor when it comes to our next point here in a bit, where we're going to get into shipping. But think about errors, missing zeros, adding numbers by accident, missed invoicing, duplication. This is a very much an alive topic. Losing documents, losing supporting documents. We had a customer that we work with who happened to have a $75,000 mistake in 6 months because they had a project, they closed it, and they couldn't invoice the customer. The invoice was lost. This is the kind of stuff we're talking about. Now, we make these errors sitting around a $75,000 based on this customer profile, and that's what we're trying to show you. But this could be a variable number. When we get into the accounting aspect, we need a lot of people to maintain these reconciliations, these journal entries, whether it's inventory, orders, invoicing, and then you're dealing with duplicate shipments. You have to have 5 people in this particular instance to maintain that, sitting at 10,000 hours a year, being quantified at $250,000 a year to maintain, because you're not running something integrated and there's no really workflow or procedure for these people to follow. Now, when we get into accuracy costs, this is kind of comes back to the inventory module. So, you go to ship a product out the door. We've had customers face the issues where they've double shipped the product because they didn't know the shipment was actually processed, or they were not able to ship an item because the Excel sheet said that there was inventory in stock, but then it turns out that they couldn't find it, or there wasn't inventory. Now you're dealing with a huge can of worms, unhappy customers, your clients are, calling, your order desk is overloaded. And it really is, again, a variable cost. And we didn't include any numbers against this because we know this is a quantifiable measure that only you as a business owner can actually measure and quantify yourself. When we talk about integration costs, now most times when you're a 50-person size company, you'll probably be running some sort of minor systems on top of your systems, whether it's asset management, CRM, e-commerce plugins, or any sort of integration with regards to payroll, accounting. There is going to need to be some level of integration. In this particular instance, there was. The development behind this was one full-time employee yearly, quantifiable at 2,000 hours, coming in at $50,000. Now that's a very conservative number for someone to be paid $50,000 and be a developer to maintain those integrations. Now, when we also talk about broken integrations, we're also dealing with an on-premise solution. We're dealing with a private cloud solution. So that still means Windows Server updates are going through, integration needs correcting, security updates happen, I think almost weekly, if not bi-weekly, with Microsoft servers. And you're dealing with these updates that tend to break these connectors. And this isn't an anomaly. This is not a matter of if this is going to happen, it's just a matter of when. And these updates do tend to be very potent to many integrations. When we talk about payroll processing, the rule of thumb I like to say is you should have 1 payroll person for every 500 employees with a consolidated solution. And if you don't, there's probably something wrong and you're having a lot more overhead. So from a payroll processing standpoint, here we have 3 people, and I've put it in as 1 full-time and 2 part-time, right? Payroll is something that happens bi-weekly, and we've quantified that at around $75,000 a year. And these aren't numbers that, we're pulling out of, God knows where. These are numbers based on what our customers have come off of. This is numbers that we've used and referenced and have our case studies on from our particular client perspective. And also Murray's 25 years working in ERP, my 8 years or so, 7 years working in ERP software. This is just simply how the world works. When you talk about total systems and the systems in place, you also have to pay these the actual software fee. So I've put it in at $15,000 because if you're running the bare bones, it's probably what it's going to come out to be for your yearly maintenance costs or subscriptions, whatever it might be running. And that's going to be including your asset management systems and your CRM solutions. So you can take these numbers and manipulate them to your liking, but then you also have, your installation fees of $75 as a billable rate with approximately 15 hours to actually install it, bringing it in at $1,125. So when we're talking from a total cost of ownership standpoint, this is costing you almost $800,000 a year to manage this company with these particular requirements. And we haven't even really gotten into the meat and potatoes of the operations behind this company. So we've probably covered about 60% of what this business in particular was experiencing, but there are so many more different aspects that you need to take into consideration because operations needs to drive the way your business is run. When we compare this with a cloud ERP software, and I'm not going to say it's Acumatica, just the right system, because Acumatica might not be the solution of choice, but finding the right product is just as critical. And there's a lot of variables where that can be, that can cause a failed product implementation. Bias tends to be the biggest. If you've worked with a product in the past, businesses will look at it from a different perspective and be like, oh, well, we'll save on training fees and we'll just get the CFO to train our staff. But then you're like, okay, well, we'll save on training fees, but now you're fitting a square into a circle. So now you're trying to pay for, let's say, even a cheaper solution. That's another risk. You pay for the cheaper solution. You're trying to fit a square into a circle. You're paying crazy amounts of dollars on customizations. You're also dealing with IT costs, but it's 2020. It's time to get with the times. There's web-based solutions out there, and there are different alternatives when it comes to implementing a proper and a very solid business solution for your business. And no business is too unique. These programs are designed for exactly this. But when we're talking about the right product for your business, what can you expect from the best solution you can have? From a web-based solution, you're not dealing with IT fees at all. That is a completely eliminated cost. This is not something that, a lot of people are really sad to see go. A lot of people don't really like to see, and talk about IT and techie terms like Murray was mentioning too, the VPNs, the RDPs, the Cisco's, all this stuff. Nobody wants to hear that anymore. You don't have to. So we've quantified this as zero because you simply don't need these unnecessary IT costs anymore. When we talk and compare the ERP management to people management, we're looking at about 4,000 hours a year because you can't fully eliminate people. But we've dropped this number off by 4 individuals and we've made it down to $100,000 because this is just a fee that you will have to pay. You'll need people to manage, warehouses. You'll need people to manage projects, whatever your business might be. You might need people to manage orders, whatever it might be. It's obviously not a cost you can eliminate, but it is something you can substantially reduce with automation and enhancements and a fully integrated business solution. When we talk about accounting, well, your reconciliations are now manual. So you have that one person managing all your accounting transactions, managing invoicing as well, because, well, you don't really need to manually data entry, import things anymore, because you have everything nicely integrated in the business solution. So you'll have one person managing your month ends, your invoicing, your year ends, and we've quantified that at a salary of $50,000 a year for one individual to run, because you won't need any more than that. Accuracy costs. The Excel sheet is inaccurate and inventory on hand, variable, not applicable. Let's change that because it's not. It's not applicable anymore because you have real-time inventory, you have real-time visibility in your system, and this is just not something that would hit close to home for you anymore. Integration costs, well, development, maintenance, not something you will need. If you happen to be somebody that's, running a lot of different add-ons, you won't need it anymore because these hooks into a web-based solution are so easy to connect into. You're dealing with open APIs, you're dealing with better platforms, newer technology, where all of these new platforms like CRM systems, e-commerce plugins, they weren't built 30 years ago like most ERP products have, or a lot of our competitors have. These things are built in the last 5 years because there's been such a gung-ho initiative to get these up and running. So we've quantified all of these metrics at zero because you won't need them. Payroll processing might be consolidated into accounting depending on how many people you have, and most likely in this particular case it was. They only had 50 employees. Payroll was having time entries tracked through the system, and payroll was run weekly by pretty much hitting a button, to say the least, and everything was nicely processed. So when we talk about quantifiable measures, okay, so let's say a total system for an ERP solution costs you $50,000 a year as an annual subscription. Even still, with a yearly upgrade at a billable rate of 175, which, depending on your partner, these are sort of numbers that tend to fluctuate. I've seen them go even as high as 225 US dollars an hour. But if we allocate 50 hours for an upgrade, which is a lot even in the highballing, and we're talking you have lots of integrations, lots of APIs, lots of things that need tweaking, modifications, that's a high end of an upgrade. And we're looking at a total cost of ownership with an integrated business solution of $208,000. Very different than the almost $800,000 it was costing us before. And I don't want to dwell on this too much longer, but Murray, I do want to get into that Excel management stuff. From a number standpoint, I think it's pretty clear it makes sense, but let's talk about Excel.
Whew, that's a lot of numbers there, hey?
I know it's a lot of numbers, but I know this is something we're so passionate about, but we got to educate people on it.
Well, I think the key thing is, and then we talk about numbers, is that, and when we think about total cost of ownership, I listed off about 25 different categories. And what's most important, you'll find lots of TCO tools, and we have one that you just presented yourself. And what we like to do is drill down into the details, into the numbers like Samantha just did. What we'll find typically is that almost in every one of those 25 categories, usually there's maybe even 1 or 2 places that can be compelling and drive that positive return on investment. But yeah, let's talk about spreadsheets. I think the key thing is that I've heard so many companies that just, in some cases, they'll just pride themselves on running a enterprise on QuickBooks or Sage 50 / Simply Accounting. Now those entry-level products are absolutely excellent for smaller businesses. But if you really do need real-time systems and you start to push the limits, what you'll find is that as much as they're running those systems, they're just handling their basic accounting, and really what they're actually using is spreadsheets or our spreadsheets, Excel, things like that. So we
Mm-hmm.
find that that's a lot. Oftentimes we'll ask, if we're trying to understand what makes a business tick, and if they say they're running QuickBooks, but they're running a $70 million company and they have all this inventory or distribution or people, consultants and stuff like that, all of a sudden they're either managing it in spreadsheets, or in some cases they maybe even have a kind of a home built standalone application, and we can tell lots of stories around
And they're
that.
so proud of it too.
Well, yeah, and with good reason, because they've spent in some cases millions of dollars on this. And but if we think about spreadsheets, what we've seen, and I cite back to.
Oh, Murray, we lost you again. I didn't think we lost Murray again. Yeah, we lost Murray again. So when we talk about spreadsheets and we look at this from a quantifiable perspective, these spreadsheets tend to be, very dangerous to a lot of businesses. And it's not uncommon for, oh, are you back?
I hope so.
I don't know, you keep breaking up. But when we talk about these spreadsheets, we always have these problems when businesses, either have custom developed applications like Murray just said, or these Band-Aid solutions that they've bolted on, or these Excel sheets, and they're proud of it. And you know what, at one point, yeah, it makes sense. When you're a small enough business, you are able to run Excel and you are able to manage your business and operations from top to bottom using an integrated Excel solution. But when we're talking, a $20 million company or $50 million company or an $80 million company, and you're running a custom application that you're paying, full-time development around the clock, or better yet, Excel. Well, at this point, you don't really have really good insight. You don't have visibility. You don't have analytics. You don't know what money's coming in tomorrow. You don't know what your inventory is really at. So, and you're paying a lot of money to manage these systems.
Am I back now?
I think you're back now.
Yeah, sorry about that. Geez. So a couple of points is that I'll make around that is that. So first one is inefficiency. So what you find is, as Samantha just mentioned, if you have spreadsheets, how many times have we as people come into a meeting where you're sitting at the table and everybody has a different set of data? Well, and so the ops guy has his list of the top customers, or the accountant comes with a list of outstanding receivables, but the president is sitting there with another list. And again, that's a risk right there. How much does it cost of your time? And these are your most senior people to actually maintain their own set of data that's outside of the QuickBooks or whatever other system you might have. There's a huge cost in that. Just think of the cost of one senior executive right there. If you've got a full-time equivalent person like that that's maintaining data like that, that can pay for an ERP system. The next thing would be timeliness, accuracy, completeness, consistency of data. What that's talking to is the need for real-time information. Again, not all businesses need that, but if you've outgrown, if you've kind of grown past the mom and pop type store, or beyond the number of people that if you walk around an office in a minute and you can see, if all of a sudden now you're outgrown that, you need better data to manage that. And that kind of goes to that inventory management example that Samantha just made. So if we can reduce the inventory by using a real-time system that's tracking ins and outs from purchase orders and sales orders, and it's tracking that in real time, all of a sudden you can look at your data and manage inventory better. But then a little bit around risk of error and data loss. The one paper I mentioned talked about the risk of data of error in spreadsheets as 88%. And what that, and they have a couple examples of just simple cut and paste errors. In one example they had, it would amounted to a $24 million overpayment to a supplier contract. But again, fraud, or using a plus sign instead of a minus, we all can relate to instances of error. And I know one of our recent customers specifically mentioned overpaying a supplier by $75,000, this was before they implemented their system, just because they didn't have a good track and they hadn't properly updated some of the data they're tracking. Anyway,
I don't think we've had any of our customers, I mean, we should be wrapping up here. We got about a minute left, but I don't think any of our customers have ever said, oh my God, I wish it went back to Excel. And it's just not the case, right? I mean, we've never seen that, regardless of product. And I think the one thing that I want to wrap up with is there are a lot of ways to screw this up. And you can buy a really crappy system, and that could be one of the reasons, you might have a really terrible opinion of ERP or business solutions as a whole. Oftentimes, I think the biggest risk factors that are associated with these problems are, like I mentioned earlier, bias. Just because someone's worked with a product in the past doesn't necessarily mean it's going to be the right fit for your business. When you're buying things that are a little bit older, you start running into integration risks as well. But biases tend to be the most dangerous when it comes to any sort of software selection process, whatever it might be. The additional aspect to that is when you're faced with picking a business solution, you can't have accounting driving this decision. Operations drives accounting. There is no accounting without operations. There's nothing to account on. So I think you have to really start and identify what you're looking for from an operational standpoint and see if procedurally you can resolve any issues before a solution. And if not, never have accounting leading an operational based decision.
Hey, you're beating up on us. You're beating up on us, accountants. Let me conclude with one point: is that hey, just dropping in an ERP system is not the be all and end all. So when we do these ROI or TCO type calculations, you have to make sure that you have enough time dedicated and dollars dedicated for initial training and setup, and more importantly, continuous improvement. So that's the key thing I would say, is that you're doing this because you want your business to grow and sustain, and so therefore you have to always make sure that you're continuously improving. So I'll let Samantha wrap it up from there.
Yeah, and our final food for thought is people that have access and had an ERP system, regardless of product, have seen the value and the return on investment and an ultimately lower total cost of ownership. And which is why when they purchase an ERP the second time around, you'll notice that the priorities of the actual context behind picking the business solution drastically change. Level of support by your partner is one thing, but also the software's ability to fit the business and the analysis is the third. Price of the software is really irrelevant because people have happened to see the value of purchasing an ERP system. So thanks for joining us today. I think we're a minute overdue, Murray, but that was a lot of information in a 31-minute session.
Great. Yeah, thanks for joining us, and look forward for our further podcast. We do these every week. Thanks, Scott.
See you later.